Hello traders and welcome to another video review. Today is Friday, October 10th, 2025. Let's take a look at the economic calendar for today. So what do we have here? Asian session, quite eventless, I would say. But we still have a London session, which is quite eventless as well. So what do we have here? Some data from Denmark, some data from Switzerland in form of the consumer climate scheduled for release at 9 o'clock. And then Turkish retail sales scheduled for release at 9 o'clock, and that's about it. But because it's a first Friday of the month of the October, we got non-farm payrolls Friday. Non-farm payrolls, average hourly earnings, participation rate, private non-farm payrolls and unemployment rate. All of this data is scheduled for release at 2:30, and at the same time we got data from the Canada employment change and unemployment rate. Michigan 1-year inflation expectations, 5-year inflation expectations, consumer sentiment are all scheduled for release at 4 o'clock. Then the CPI data from Russian Federation are scheduled for release at 4 o'clock. US Barker Hughes oil rig count and total rig count are scheduled for release at 7 o'clock, and federal budget balance is scheduled for release at 8 o'clock. So, non-farm payrolls Friday. So, without any further ado, let's switch to the charts. We start with euro-dollar. Euro-dollar is the most affected pair by the non-farm payrolls data release, and as you can see, our scenario for the euro-dollar is actually quite right. We are waiting for the wave Y to be completed. Right now we hit the technical support 1.1545 into the extremely oversold market conditions, and the market is now trying to perform a pullback. Nevertheless, it doesn't actually look like this situation here will last for long. The other technical support, now resistance 1.1577, is now right now blocking the way to the upside. Let me just place, because there is so many lines, let me just place a black line at the level of 1.15 as the target for the wave Y in form of the perfect geometry. 100% of the wave W measured from the top of the wave X is the 1.15 target. So I will just remove this Fibonacci here because we don't need it. There you go, and now it's a little bit clearer. So that's the target for the wave Y. That's the obvious target for the wave 100%. Maybe the wave Y will be extended to the downside a little bit more. We will see in the future, but now that's the target. And the market is moving exactly as we expected, as our scenario shows. NFP payrolls might even make another spike towards this level here. It's only 66 pips for now. 66, 76 pips, something like that, towards the target. So not too bad. So euro-dollar, perfect situation here. British pound, as well as the euro-dollar keeps moving lower. WXY pattern is being developed. You can see that we hit the 60. We broke first thing. We broke below 1.3346, 1.3332 at technical support. Right, we got a big, nice breakout candle. We hit 61 projection of the wave Y. Okay, so one of the scenario might be like this. So the 61% is perfectly fine for the wave Y to be completed. We have a little bit of a buying the dip here. Nevertheless, that might be because we hit the extremely oversold conditions. So some kind of a pullback is being now created. 1.3331, 1.3342 is now technical resistance, so it will cap the market on its way to the upside, but it still looks pretty bearish for me, which is why we will continue with our scenario. Let me place the black line here as well. The black line at 100% of the extension is 1.3126, let's say, somewhere there. And this is how it looks like for the British pound. So it's either here, let me place a line. So it's either here and we are done with the downside movement, or the next target is here. Okay, so that's the situation for the British pound for our time frame chart. Clear. Now US dollar versus the Japanese yen keeps moving higher. Obviously the target is still 154, let's say 85. Local high was made overnight a few hours ago, and this level is 153.28, but this is only because we hit the extremely overbought conditions. So some sort of the pullback might be happening here. Local technical support, it's the obvious low of yesterday's low, and that's 152.14. Plenty of the support below, but there is still the gap. And the market, as you remember, have a tendency to close the gap, to fill the gap. So we need to wait for the market to see what and when this market will do. Sooner or later, this gap will be obviously filled. Right, so the euro dollar, British pound, US dollar versus the Japanese yen. What else can go to the upside? We got data from the crude oil later on, right, on Friday. So let's take a look at the crude oil. 100 periods moving average on a 4-hour time frame chart located at 60 to 83 is capping the market bounces. Anytime bulls want more from life. And this situation here might be quite interesting. Okay, so that's a red. Okay, that's a red. And this situation here, 60.41 is the low of the last week, I guess. Yeah, this is the low of the last week. This week, typical corrective pattern to the upside. I'm wondering how much did we retrace here. Nevertheless, 100% moving average is enough for the market to push it. To block it. Local low right now 61.13, and we are moving even lower. There is still a bearish pressure. Let me just place some kind of a line here for the support. There you go. We have this short-term trend line. Might be useful because it's been recognized in the past. We might see some kind of a either breakout, obviously, or a bounce from this line, but the upside is limited anyway, so this market won't go anywhere higher unless this situation will be completely different. Some fundamental trigger will change it. Gold extends the correction from the local high, swing high, and all-time high at 4,057. We went as low as 3,944, so that's over $100. Not that bad, but eventually this is the biggest, I guess. Let me just measure it. This is the biggest correction here. Yeah, no, this is not the low. This is the low. 2.82, 2.15, 1.94, 2.03, 1.99, 2.82 is the biggest correction since the beginning of the September. So that's a quite interesting information, especially if we hit the neutral level on the RSI. So now it's quite clear. We are oscillating around the round number of $4,000 per ounce. Correction is quite big. Nevertheless, it looks like the dips here around 3,944 are being bought. But if we get towards the level of 3,895, which will be around $160 away from the all-time high, this market might get to the extremely oversold conditions, and big, nice correction will be ready. I mean, big, it will be like 5% or something. But it's still the bigger in the September, the biggest from the September lows, and the biggest in October, obviously. So we can continue. We can continue to move higher. So right now, some kind of a profit taking, some kind of a supply is coming to the gold market. Stay focused, stay vigilant, and last but not least, let's take a look at the Bitcoin. The Bitcoin is on a 4-hour time frame chart, still under the pressure, bearish pressure. We almost hit the technical support, 119,445. We are getting away from the supply zone, obviously, and getting away from the all-time high, 126,217. And we're getting closer and closer to the demand zone and to the 100 periods moving average. We already got the negative RSI. The market has been trying to oscillate around the neutral level of 50. However, right now it's 46, and it was 40 already after this big candle down. As you can see, the market has this tendency to do this 4-hour time frame red candle, big candle. So that's the second one, right? Now, any breakout below yesterday's low would likely end up with the test of the demand zone. I just remember the demand zone is located between 118,000 and 117,000, let's say, all right, roughly. So that's the situation on Bitcoin. Temporary pause for the rally. You can see that there might be some kind of a trend line. However, I don't think it is completed just yet, despite the fact that it looks like, from the Elliott wave perspective, from the top, obvious freeway down, and maybe something like this. So the ABC is done, but it looks like the market wants to make it even more complex and time consuming. So please prepare for another whipsaw trading conditions on the Bitcoin, unless the market participants get tired, or unless we hit the demand zone, and the demands will be so big that we travel higher, straight towards the all-time high, breaking all of the technical resistance. Any breakout below the demand zone is likely even more bearish than you can think. All right, so please stay focused, stay vigilant. NFP payrolls today, the data that everyone is waiting for, even the Fed. So remember, 2:30, non-farm payrolls data release. Market might get violated as well. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and